What's up, guys? It's Jonathan. In front of you, we're looking at the QQQs. I'm going to start out with a warning about the market. Risks are elevated right now. After I plead my case, I got a trade idea. But first, the warning. In front of you, QQQs. This is a study of the 21-day historical volatility, 3 standard deviations, 4 standard deviations, 3 standard deviations, 4 standard deviations away from that 21-day historical moving average. QQQs are seeing sell signals, which tells us it's getting a little frothy. On the other hand, if I go to the volatility futures, buy, VIX rally, Qs fall. Biden talks about extreme tax measures that can shock the market. What am I doing? I'm concerned with risk right now, so I'm in the short term QQQ, the NASDAQ, 8 days until expiration. I own these puts, 323 strike, about $1.15 mid-market, and I actually got involved right around here. Bought at $1.12 earlier in the week. I think they traded up to $2.20 or $2.40. I didn't do anything. I need them for my downside protection. But if you need downside protection, something to consider as well. You don't need the 323s. QQQs might be much higher or lower by the time you watch this. Just pick something. Let's add delta. Just make sure when you pick something, it gives you a little bit of delta. So if I initiated a fresh position right now, I would probably go closer up here. Unfortunately, I don't have that option. But now on to the trade idea. For this trade idea, I'm going to open up our Wall Street Wiretapper. It's an unusual option activity scanner that's powered by a neural network. I'm going to look short term. 10 days, 5 days, I want to see what's coming up right now. But I also, because I'm going to share this with a bunch of people, I want to find a cheap option. I want to find an opportunity that we could hold for 30 or 60 days, not so expensive, just so you can follow along. So let's go under $5. So 5 days, under $5. The Wiretapper is going to spit out the top 10 stocks that we believe have the highest probability of moving past their implied volatility in the markets. So said in other words, these are the stocks or the options that we want to either buy calls, buy puts, or buy calls and puts. Whenever you buy an option, you're getting long volatility. Whenever you sell an option, you're getting short volatility. Short volatility is you want very little movement. Long volatility is you want things to go bananas. SOS is the top name that has the highest probability of outperforming its implied. UVIXI, GNUS, NCMI, ASXC. If you scroll down on the Wiretapper, you'll also see the top 10 stocks between 5 and 100. Over the last 5 days, we're not looking at a lot of time here. And then the top 10 overall seen over the last 5 days, not under $5, not between 5 and 100, but any names. But I want to bring your attention to ASXC. So ASXC, I have it in front of you, the same high value target tool that we're looking at the 21-day historical volatility. Tight range for quite some time. Surgical company, I'm sure they came out with some unbelievable data or a new product or something that was pumped, came all the way down. But now we're seeing a buy signal. So not only is the Wall Street Wiretapper picking up unusual option activity, well, on a daily, looking at quite a bit of data in a very volatile stock, we're also getting a buy signal. Okay, so I'm only going to look at the calls anyway because we're going to play the high side or the long side of ASXC. But now I want to think about time. So the way that I would think about time for this would be, here was the last signal. So like this amount of time using this chart, it's quite a bit. This is like February 22nd. So call it beginning of February when this thing really started moving. So today it's April 22nd, almost about 4 months, guys. That's 120 days. So 120 days, certainly not enough time. Certainly not enough time to be in May and even June. Now, this kind of trade idea, I wouldn't go out. That's just too far. 1.86. These are awesome. I absolutely love these. And let me explain to you why I love them. So if we go back and look at this chart, let's say, let's say it just gets like back here, right? Mid-range. And I know some of you are going to comment about ASXC and there was a massive short report and this happened and that happened. I've been doing this for a long time. So even short selling reports or any kind of news, shit happens. Okay? Traders need to think like that. We don't know, expect the unexpected. You trade long enough, you're going to see everything. Let me rephrase. If you trade long enough, you'll know that anything could happen. If we do get up here, that's like whatever, $354. $354. These for 40 cents. These, so what I would do is 15-cent bid at 20 cent. These are okay. These are probably decent. I would also look at the high and at the low and at the last, because with this kind of options trade, you gotta be really careful with the price that you pay. So this is actually going to be a good example of that, because there is volume. It's definitely trading and there's tons of open interest. I wouldn't be in the money at all. I'd want to be out of the money. So if we look at these 2.5s, the last was 28 cents. 25 cents would be a darn good bid right here. That was the low of the day. 25 cents won't trade, but that's a very good bid. So 20-cent bid is a no-brainer here. Last is 25 cents. The low is 25 cents. So if you can then be the low of the day and bisect this market, 20 cent would be a good bid. 15 cents at 20 cents. Same thing. So as the stock down ticks, these are going lower. But don't touch, like if you see this market, a nickel at 20 cents, you should never, ever, ever buy these. Maybe 15-cent bid. So what I like in something like this is you make a decision that, hey, I want to bet $300. And if you make a decision you want to bet $300, then 20-cent bid, you buy 10 of them, it's $200 of risk. Wait a little bit, you have $100 more to play with. You have 85 days, and if we're right, that $300 can become $1,500. Now your risk is principal. Whatever you invest, whatever you play. There's no such thing as having a stop when it comes to these options. It's just not. You can't get into this trade thinking that you're going to risk $300 and you're going to get out when you're down 120. It's just options don't work like that. If you only want to risk $200, risk $200. So that's an idea for you. That's how we find trades. I did an example because I wanted to do a low price stock, ASXC, very volatile. I'm sure whatever brought their stock down, they deserved it. But enough's enough. The punishment doesn't fit the crime. Let's rally back and trade $4. Good luck to everybody. Hope you enjoyed that. My name is Jonathan Rose, owner, Masters in Trading.